We have loaned about $80,000 to our C Corp and plan to close our Corp down if we don't make any money. So I think what they're saying is the corporation isn't making money. How do we pay back the $80,000 to creditors if it's in our personal names but was for the business? And so what it really comes down to is it sounds like a shareholder. So I'm going to use the terms as you would look at it legally. You have shareholders of a corporation that has loaned money to the corporation. It's called a shareholder loan. And if you shut this thing down, the C Corp, there are rules. It's called a 1244 stock election that allows you to take a personal loss for the value of your contribution to the company in exchange for shares. So if you shut this down right now, you do not meet that criteria, and what you have is a bad debt. And you don't get to write off your personal bad debts because it's not your business. Jeff, you can correct me if I ever said, I like Jeff looks at me over his glasses all the time. And I should say this, that last week I had one number wrong, and he waited till the end to say, oh, you said something wrong. And I was like, next time just interject and slap me. We'll go over what that was too. It's a nuance, but it's still there.
But this looks more like a case where they're making payments directly for the corporation. For the corporation's expenses.
Right. So they were probably paying expenses. So using a personal credit card for buying things, travel, etc. for the company. So you don't get to write that off if you keep it personal. So what we have to do is contribute it to the corporation in exchange for shares. Now you become a shareholder, and now, and only now, could you do what's called a 1244 stock loss. If you do the 1244 stock loss and you shut the company down and file its final return, then an individual can write off up to $50,000. A married couple can write off up to $100,000.
Correct.
Against their personal income.
Yep.
This is really important. This is how you do it. Otherwise, you get nothing. And before a bunch of guys say, hey, wait a second, that's, you have to have made money in the company if there's an accountant out there. We've actually had this one done with a client who made zero money inside the C Corp. Never made a dime. It was a $67,000 deduction. And it was on an amended return because his accountant told him that he couldn't write it off. And I said, hey, just give it to me. I'll do it. But I want, but we'll handle the audit if it gets triggered because this is a pretty significant loss. You're probably going to get at least letters asking you, what was this all about? Why did you change this? So he got a letter, we wrote it back, and the IRS accepted our position without question because it's black letter law. This is what it says. If you contribute and if you follow underneath the criteria of being a 1244 company, a small business company, which means less than $5 million of capitalization, the money was for the original issue of the shares, which means that you didn't buy it from somebody else. All these things, all these criteria, less than 6 shareholders, I think it is. Which means 5, all these criteria, then you get to take it off. So you get to write off the $80,000 personally if it's a married couple. If it's a single person, it's limited to $50,000 against your other income.
However, if it's a single person, the additional $30,000 that you convert, that's a capital loss.
Repeat that. I want to hear that.
So, like this person had $80,000. This person had $80,000 in losses. If they're single, then they would be able to do the 1244 loss for $50,000.
Mm-hmm.
The remaining $30,000 is money still owed to them. So it's a non-business bad debt, which equates to a capital loss.
Mm-hmm. Which means they would just take that on they wouldn't get to offset their ordinary income.
No, they would have to offset other capital gains.
Or I suppose because it's the same thing as contributing it and taking a $30,000 loss.
Right. So in this case, you deduct $3,000 a year for the next 10 years.
All right. Somebody's asking, would that apply if I set up a trading account under the C Corp? Yes. That's actually the case that we went under audit with. And we won. And I got a tie out of it. All right. That's a true story. I think I got a $30-some thousand check from the IRS and I got a tie.